In this video, you're going to get the complete unfiltered truth about CMEG broker and whether this offshore trading platform is actually worth your time and money in 2025. I've spent months researching Capital Markets Elite Group, analyzing their features, testing their platforms, and digging into both the benefits and the serious risks that come with using an offshore broker. By the end of this video, you'll know exactly whether CMEG is right for your trading strategy or if you're better off looking elsewhere. First, let's address what CMEG actually is and why it exists. Capital Markets Elite Group is an offshore brokerage firm that provides retail and institutional clients with direct access to trade various markets through professional trading platform. The company is based of Trinidad and Tobago, which immediately tells you this is not a US regulated broker. The primary reason most US traders even consider CMEG is simple. It allows you to bypass the pattern day trader rule. As an offshore broker located outside of the US, CMEG allows US residents to bypass the BTT rule and day trade more than 3 times in a rolling 5-day period with less than $25,000. This is the main selling point that attracts small account day traders who feel restricted by FINRA's $25 minimum requirement for pattern day trading. Let's talk about account minimums and margin requirements. CMEG offers different account types with varying requirements. You can open a standard account with a minimum deposit of $0, but if you want an active account with better features, you'll need at least $500. For margin trading, you need at least $500 minimum for a 4 to 1 margin ratio, and anything above $2,500 gets you a 6 to 1 margin ratio. Active accounts must maintain a $350 balance to maintain trading permissions and monthly subscriptions. The fee structure is one area where CEMEG tries to compete. They offer $2.95 trades, which is competitive when compared to some other platforms. However, you need to understand that these pricing come with trade-offs that we'll discuss throughout this review. Now, let's examine the trading platforms CMEG provides. The broker offers access to several professional trading platforms, including Sterling Trader Pro, which is popular among traders for its speed and functionality. You can buy and sell a good range of financial instruments, including equities, options, and ETFs. The platforms are designed to offer efficient order execution and real-time market data, which is crucial for active day trading. CMEG provides global market access, allowing traders to engage with various markets around the world. This international reach can be appealing for traders who want to diversify their trading across different time zones and market conditions. However, here's where the serious concerns begin. The biggest issue with CMEG is the lack of regulatory protection that US traders are accustomed to. When you trade with offshore brokers, you do not get the same level of assurance as trading with a US registered brokerage. If something goes wrong, your recourse options are extremely limited compared to dealing with a domestically regulated broker. The regulatory concerns are significant. With a non-U.S. broker-dealer, you are no longer covered by U.S. federal deposit insurance, which would protect funds you deposit into a U.S. brokerage account. This means your money is essentially unprotected if the broker faces financial difficulties or goes out of business. Additionally, when trading with offshore brokers, you can face challenges reporting fraudulent activities to local financial institutions. The offshore jurisdiction may provide these brokers more flexibility, but it also means they can avoid having to follow FINRA rules that protect US traders. Cost is another major concern. While CMEG advertises competitive commission rates, offshore brokers typically charge higher fees and commissions that will eat away at a small account. The total cost of trading, including spreads, financing cost, and various fees, often exceeds what you'd pay at regulated US brokers. Customer support and service quality can be inconsistent with offshore brokers. When you have issues or disputes, resolving them can be complicated and time-consuming compared to dealing with domestic brokers that are subject to US regulatory oversight. Let's discuss the technology and execution quality. While CMEG offers professional trading platforms, the execution quality and reliability may not match what you'd get from established U.S. brokers with advanced infrastructure and regulatory requirements for BACS execution. The reality is that many traders who turn to CMEG are looking for a shortcut around the PDT rule without fully understanding the risk they're taking. The PDT rule exists for a reason, to protect inexperienced traders from quickly losing their capital through excessive day trading. By circumventing this rule, you might be exposing yourself to even greater risk. Here's something crucial to understand. If you don't have $25,000 to meet the PDT rule requirements, you probably shouldn't be day trading with borrowed money through an unregulated offshore broker. The combination of high leverage, lack of regulatory protection, and the natural difficulty of profitable day trading creates a perfect storm for account destruction. Tax implications are another consideration. Trading through offshore brokers can complicate your tax situation. You'll still need to report all trading gains and losses to the IRS, but the documentation and reporting process may be more complex than with domestic brokers. For those considering CMEG, you need to honestly assess whether the ability to avoid the PDT rule is worth the significant risk you're taking. The lack of regulatory protection, higher cost, potential execution quality issues, and complicated dispute resolution processes are serious drawbacks. If you're determined to day trade with a small account, there are alternatives to consider. Cash accounts with U.S. broker allow unlimited day trading without the PDT rule, though you'll need to wait for settlement periods. Some U.S. brokers also offer micro accounts or reduced margin requirements that might meet your needs while maintaining regulatory protection. The truth is that successful day trading requires substantial capital, not just for the PDT rule but for proper risk management. If you're trying to circumvent capital requirements through offshore brokers, you're likely setting yourself up for failure regardless of which platform you choose. My honest assessment is that CMEG might seem appealing for avoiding the PDT rule, but the risks generally outweigh the benefits for most retail traders. The lack of regulatory protection, higher cost, and potential service issues make it a risky choice, especially for inexperienced traders. If you have a small trading account and are considering CMEG primarily to avoid the PDT rule, I'd strongly recommend focusing on building your account size through other means first. Paper trading, swing trading, or other investment strategies might be more appropriate while you develop your skills and capital. For experienced traders who fully understand the risks and have done their due diligence on offshore brokers, CMEG might be worth considering as part of a broader trading strategy. However, this should never be your only brokerage relationship, and you should never risk your money you can afford to lose. The bottom line is that while CMEG offers a solution to the PDT rule restriction, it comes with significant trade-offs that most retail traders don't fully appreciate until it's too late. Before opening an account with any offshore broker, make sure you understand exactly what protections you're giving up and whether the benefits truly justify the risks in your specific situation.